Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gives you a complete wrap of all the stocks that are buzzing in trade. I am Darshan Mehta. Let's welcome our experts then. TS Hariyar of HRBB Client Solutions. He's running a little late, so he'll join us. Avinash joins us from TRADECAPITal, and RITESH ASHAR of KIFS TRADECAPITal joins us on the show currently. Welcome to all the guests. Today on Hot Money, we'll discuss stocks like the tire sector. We'll talk about Bosch, we'll talk about Shree Cements, and we'll ask our guests for a stock that they believe could be a good medium-term peak at this point of time. Let's start with the first one, and that is the tire space. Now, tire stocks are dependent on, but tire is basically dependent on how rubber prices move. China rubber is down almost 30% on a YTD basis. The big question we're asking is, are you bullish on the tire space? And if yes, which is the stock that you're liking at this point of time? Avinash, I'll start with you. What's your view on the tire space and anything that you like?
Darshan, actually within the tire space, we believe that the volume growth both for the commercial vehicle, passenger car and the two-wheeler segment is going to show strong digits. In fact, we had recently met the management of SEAT, and I think clearly from the kind of management commentary, one thing is very clear that most of the tire companies are actually running out of capacity. Demand is actually growing much faster than supply, and I think it's a question of whoever has supply obviously is going to benefit the most. Our sense is that rubber prices falling is definitely going to be a positive sign. You could see definitely margins getting improving probably from the second quarter of FY19, but definitely if this trend continues, a decent amount of pricing power and a good amount of volume growth could actually propel both the operating margins and the net profits of both the larger tire, especially the CV and the passenger car players.
Okay, so that's a view. We'll come to your pick in the tire space in a while, but Ritesh, what's your view on the tire space? Are you liking this space?
See, overall, if you see from the top, 20 to 30% correction we have seen on the rubber manufacturing unit. So if you see the price, the way it is increasing and the falling down, it has done the bottom of around 140, 150 kg. Now, due to the crude oil prices falling last year, but now this time the price has already reached to 160, 170 kg, and the price is looking quite stable. As rightly said, the demand is also increasing for the vehicle and the tractor as well as the two-wheelers also. Okay. The value demand peak has increased by two-wheelers for almost 52%. In terms of revenue has also increased almost 28%. So I personally feel the way the demand of the rubber has been increasing after the falling of 20-30%, now it is a best time to consolidation phase, and the good boom can be expected in the tire sector.
Okay, so two of our guests are rather bullish on the tire space, and Hari, what's your view on the tire space?
No, we like it, and I agree with both of them that input costs are going to be a key issue. I think input costs have been positive, and that has been the key determinant of the profitability as far as the tire companies are concerned. See, our only concern is, as of now, we have a favorable government policy, especially with respect to radial imports, because China produces radials at a much lower cost compared to India. So I think if that advantage is taken off, I don't think Indian tire manufacturers would have a great competitiveness in terms of global supply. So I think that is one thing we need to be cautious about. But yes, in terms of specific stocks, we do like Apollo, but I think it would be a little stock specific in the entire space now.
Okay, so I think the general trend that we are getting in from all of our guests is that they're rather bullish on the tire space at this point of time. We'll open it up for discussion and ask them which their top pick in the tire space is. So, Hari, I'll start with you. You like Apollo tires. Why do you like Apollo tires in the tire space?
I think a couple of reasons. In terms of volume traction, in terms of profit traction, I think this company has been quite good. It has also managed to consolidate its operations both in India and its foreign acquisitions. So we believe that in terms of price after the recent correction from the peaks, Apollo looks to be a good bet if you're looking at a medium and long term perspective.
Okay, and what about valuation wise? Are you happy with it, or is it on the expensive side?
It's slightly on the expensive side, but I think it's probably worthwhile paying that premium for a stock like that. So if you look at probably any of these I would say high performing companies like MRF or Balkrishna or even probably SEAT, I think the valuations are slightly on the expensive side, but I think it's a premium that's worth paying.
Okay, Apollo Tires is the stock that Hari likes at this point of time. Which is the stock that you like in the tire space?
No, Darshan, as Hari pointed out, most of the stocks are actually trading at fair to expensive valuations, and that is why we have looked at a company called JK Tires. Now, JK Tires reported a very strong Q4 number with a PBT of almost 130 odd crores compared to 89 crores, and clearly if you see the relative outperformance of JK Tire compared to the other players, it's been underperforming clearly because volume growth had not kicked in earlier, and obviously margins were not as high as the other comparative players. But if you look at the kind of capacity utilization margin, they operate at around 60 odd %. And I think, as I mentioned to you at the early part of the show, that companies which have got large capacity are obviously going to benefit from the incremental demand which is going to come in, and that is where JK Tyre could possibly benefit. Yes, the negatives to the stock are the company has got a large debt of almost 4,000 odd crores, so that could be a little of a bit of a dampener. But otherwise, if you see the operating margin improvement in Q4, a company which generates a top line of 8,400 crores could easily generate a PBT of close to about 250 crores. In fact, our sense is that we could see a net profit of close to about 120, 130 crores, and with the equity of 45 crores, Darshan, this could possibly be one of the cheapest stocks within the tire sector.
Okay, I was just seeing, like, when he was talking about Apollo's, and most of the tire companies have actually given positive returns. JK Tyre over a 12-month period is down almost 30%. Any reason why it's trading rather weak?
No, in fact, they had a extraordinary loss in the previous 2 quarters of last financial year, and if you see the profit before tax of the third quarter, that was 89 crores, and the full year profit is 56 crores. So obviously, the markets were probably not confident that this company has not delivered on the profitability numbers. But if you see their market share in the truck as well as in the commercial, in the passenger car segments, I think Darshan, this is one stock where the brand is almost visible. The earnings delivery has not happened. So our sense is that with the large capacity yet being unutilized, and with rubber prices down and hopefully volume growth kicking in, this could possibly be a kind of a dark horse within the tire space.
Okay, dark horse. JK Tyre is the dark horse that Avinash speaks about. And Ritesh, which stock do you like in the tire space?
I would go for C8 Tyre.
Okay, what's
the reason behind it?
Yeah.
The C8 Tyre in the last year, 2017, the performance of the C8 Tyre was not up to the mark. I could say it is quite stable. The reason behind it is all about due to the volatility in terms of crude oil price and the impact of the GST.
Okay.
But if we see the growth in terms of margins, they have done better compared to the industry growth. Rubber industry is almost growing by almost 7 to 8%.
Okay.
Wherein the EBITDA margin of C8 Tyre has performed by almost 11% last year, and the projection what they are giving for the FY18 also, they are expecting almost maintained by 11 to 12%. So I personally feel there is a growth in the revenues. PAT has been also reduced compared to the last year, but it is duly because of GST impact, and it is only because of the volatility in the crude oil price.
Okay.
But I personally feel the growth story of the C8 Tyre will be start, because now 160, 170 kg for the rubber price, it has been stabilized. So I personally feel for a long-term perspective, C8 Tyre will be one of the best stocks.
Okay, so the 3 stocks among the tire space, no doubt, as a consensus, all 3 of our guests like the tire space. The 3 stocks that they spoke about, Hari likes Apollo Tyres, JK Tyres is the pick that Avinash spoke about, and Ritesh likes C8 at this point of time. We'll move on to the next stock, and that is Bosch. It's been a marked underperformer over the period of time, not doing well. It's come out of the Nifty, it's down almost 25% over a period of 1 year. But the company yesterday gave some positive comments, indicated the fact that they're looking more bullish as far as India is concerned. A 1,700 crore capex is something also that they announced. Is it the right time? Has the stock bottom out? That's the view that we're asking. Ritesh, I'll start with you. What's your view on Bosch? Should someone accumulate it?
Yeah, definitely, because long-term perspective, if you're talking about the yesterday, what the news has come out, 1,700 crore has in capex they are deploying for the year of 3 years of horizon. It is purely clearly indication company would like to capitalize the market demand. Because of that reason, the company would like to deploy for the long-term horizon of 3 years, and this 1,700 amount will be utilized for the market capitalization as well as the deployment and the innovation of the products and the services. At the same time, 10,000 crores of profit last year the company has earned from the India itself. So I personally feel whatever the correction has happened in last few months, it is a good time for the long-term perspective, and the good news is ahead. So I personally feel the good profit can be expected in next 12 months of time.
Okay, so it's a bullish call that's coming in on Bosch by Ritesh. Avinash, what's your view on Bosch? Will you accumulate at these levels, or will you wait for more correction?
No, I think Darshan, Bosch is a direct play on the commercial vehicle and the tractor segment, and I think looking at the kind of BS3 to BS4 norms, last year I think they had a hit on their EBITDA margins to the extent of almost 500 basis points. So obviously that was a one-time cost. I would believe that as volumes kick in for both the commercial vehicles and the tractor business, we could see definitely margins improving, and a company like Bosch can easily afford a capex of 1,700 crores. It's a debt-free business, a very high return on equity business, and to that extent the parent is taking increasingly interest in the Indian market, which our sense is a very positive sign. Clearly from a 12 to 18 month horizon, I would believe that this could be a good stock to actually accumulate. This stock has always enjoyed premium valuations and has refused to come down despite lackluster numbers. So I would believe that yes, if somebody were to take a longer term horizon, I think probably one could definitely look at it purely from a portfolio perspective.
Okay, so the second thumbs up comes in for Bosch for a medium to long term perspective. Hari, do you like Bosch? Would you accumulate?
We do, but we need to understand one thing, that this 25% correction we are talking about in Bosch, it comes on the background of a very sharp rally we have seen since 2009-2010. I think it has gone up about 14 or 15 times in that particular period. So I think from that perspective, 25% is not too great. While we like the stock, I think there is still some more room on the downside to go, because if you look at the EBITDA impact last probably 4 or 5 quarters, I think there has been a sharp impact, and we expect that the worst of the EBITDA impact is not over. So probably 1 or 2 quarters more, we could see the impact continuing. And we do believe that probably 10% lower from here, around 14,000-15,000, the stock should be an extremely interesting pick. At this level, we would probably avoid that stock.
Okay, so that's the view that's coming in. 2 of our guests like Bosch, they're saying it should be accumulated at this level. Hari does believe that a potential 10% downside is still possible. Hari, why do you say that there is more impact on the financials that is left? Anything that you're visibly seeing that's playing out that could further ruin the numbers for Bosch going ahead?
No, not much, because I don't think that the overall impact has been very high. If you look at the overall impact, I think it was about 4 or 5% was the total impact as far as the EBITDA was concerned. But what we look at is that the kind of input cost increases that they saw over the last year or so, I think that could have a lag impact over the next couple of quarters. So probably I'm not saying that the stock is going to see a major fall in profit, but probably the impact should continue for a quarter or 2 quarters more. So once that is done, we believe we should get this stock about 10% lower. That should be a good level to probably enter the stock.
Okay, Ritesh, what's the key trigger that you like Bosch? What is that you're waiting for, that that could probably happen, that will take the stock much higher?
See, basically, if you see, as I rightly said, the rubber industry is growing at around 7 to 8%, but CAGR is also running at around 10%. So, EBITDA margin of the Bosch is almost at around 11 to 12%. But the way 1,700 crore will be deployed as in capex, so you can easily make out what kind of profit margin will increase long-term perspective. So, right now, the profit margin is already running at around 11 to 12%. But at the same time, when the more capital will deploy, looking at the business perspective, and as I said, to capture the market share, so you can still understand that there will be a bottom line approach also in terms of revenue growth.
Okay.
So I personally feel, coming for a long term horizon, if you'll have a vision for 2 to 3 years of time, the profit margin can easily grow by almost 11% to 14 to 15%, but at the same time the absolute profit will also grow. So please understand, in terms of revenue also will grow, in terms of profit margin also will grow. So long-term perspective, this will be the strong stock.
Okay, Avinash, do you agree in terms of financials? It has had a series of weak financials that are going in. Will this be a turnaround going ahead?
No, I think clearly, as Hari pointed out, maybe for 1 quarter the margin could be hit because price increases may not happen immediately. But I think in this business, Darshan, it's very clear that except for a technology change where the company has to make a huge investment, the cost plus increases are definitely rewarded after, say 2 to 3 months lag. So obviously maybe 1 quarter of bad performance, but obviously if the tractor and the commercial vehicle business grows in double digits, and last year, mind you, CVs grew by almost 76%. Tractor sales this year are going to grow by at least about 15-16%. So to that extent, the volumes could definitely take care of the margins, and I would believe that probably after the 2nd quarter or maybe the 3rd quarter of FY19, you could possibly see a stronger set of numbers which the market is keenly waiting.
Okay, so that's the view that we're getting in on Bosch at this point of time. It's more of a wait and watch. 2 of our guests are rather bullish on Bosch, but that's more for a long-term perspective. Hari does believe that another potential 10% downside cannot be ruled out on Bosch, and that will be the attractive level to start accumulating Bosch. The next stock we want to talk about is Shree Cement. No doubt, most of the cement companies are not doing well. Shree Cement, after ACC and Ambuja started hitting fresh 52-week lows, Shree Cement is trading at a 52-week low. In the last 9 months, the count is down almost 18%. Is the bottom made, or is the worst still yet open for Shree Cement? That's the question that we're asking. Hari, is the bottom made for Shree Cement, or do you see more potential weakness?
I would believe there is some more weakness left in the stock, and a couple of reasons. Number one, I think the pricing pressure is going to become a lot more intense, because by the time the NCLT story is over, I think the competition could tighten, because Shree Cements actually had a very focused presence in the north, I think Rajasthan, central India. It had a very, very focused presence. Now what happens is, once UltraTech takes over Dalmia, it takes over the plants of Century, I think the UltraTech virtually gets an all-India, pan-India presence. Now I think Shree Cements going ahead is going to face both product pressure and price pressure from UltraTech going ahead. So I would believe that Shree Cements from these levels could have further downsides. In fact, we are negative on the cement space as a whole. Other than UltraTech, we don't like any cement stock. So Shree Cements at this point, I think buying at least is out of question for now.
Okay, so potential more downside on Shree Cement. Avinash, do you share a similar view on Shree Cement? Is the bottom made, or is there more weakness?
No, I think Darshan, Hari's point is right that competition could increase, but mind you, UltraTech, if it does take over Dalmia Bharat, I think it's going to be taking it over by a large proportion of debt. If you see the composition of Shree Cement, I think it's one of those cement companies which enjoys a very strong balance sheet, net cash positive, and most importantly, fourth quarter was quite good. 8% growth in the volume, 7% growth in the realizations. So I would not, completely agree that maybe in the immediate quarter we could see a very strong dip in realizations. But yes, overall the structure in the cement market looks pretty competitive, and this being the lean period, possibly maybe 1 quarter of volume growth, stagnancy, and margin, stability might be seen. But over the longer term, say 12 to 18 months, I think this is one of those stocks which I don't think would fall significantly. In fact, one could definitely hold it. Fresh buying could possibly be avoided, maybe at a correction.
Okay, you meant Binani Cement, right? Takeover of UltraTech, takeover, not Dalmia Bharat. I think that's what I wanted, the correction. What about you? What's your view on Shree Cement? Is there more downside?
See, it is basically higher top, higher bottom kind of counter what we are running it. And from the already high from almost 19,580, and it is now running at around 15,000 odd numbers. So almost 15 to 20% correction in the counter is already done. Especially the counter what is running at around 15 to 20% down trade, it is moving towards the downside. So as rightly said by the expert, the first quarter will be a challenging for the company, but long-term perspective will keep the horizon. It is just like the sales growth is also running at around 10% growth on year-on-year basis. At the same time, the value peak has also increasing by 15% on year-on-year basis. If you look at the EBITDA margin also of this company, it is running at around 25%. So sales growth is increasing, the profit margin is also intact. So if you'll have a long-term horizon, whenever the correction comes, it is a good buying opportunity. For a trading perspective or short-term horizon, it is a wait and watch.
Okay, so that's the view that's coming in on Shree Cement. Obviously, the concerns still remain on Shree Cement. We'll open it up for discussion. Why do you like UltraTech? Or you're negative on it, but any particular reason you like UltraTech?
No, I think a couple of things. One is what's going to really matter now is that we are going to see a major consolidation in the industry. So probably I think ACC Ambuja, the deal should finally get through, hopefully in the next 1 year or so. So we'll be left with probably, one combination of ACC Ambuja, one UltraTech, one Shree Cements, and then probably a bunch of, I would say, smaller cement companies across India. I think what is going to matter is how you manage scale. And the larger your reach and the more number of plants you have, because cement is extremely transport intensive. So I think the more number of plants here, the larger number of markets you can service at a lower cost. So that is actually what UltraTech is building at. So I agree when Avinash says that it is taking on a lot of debt, but then I think at this point they don't have a choice. They need to probably bite the bullet and go ahead and expand their presence. And I think that's what they're betting on. So I would probably believe that if I'm looking at the next 2 years, then UltraTech is one stock I would be betting on.
Okay, anything you like in the cement space, if not Shree Cement?
I think within the south market, I think something like a Ramco cements, I think that definitely deserves a second look. I think prices have cooled off now, but if one were to take a longer term view on the cement market, especially in South India, I think any correction, Darshan, should be used as an opportunity to look at Ramco cements, because I believe that this is one market which is clearly a closely sheltered market. India Cements, Ramco is present here. Clearly here the pricing pressure going forward could be little less compared to the northern markets.
Okay, and Ritesh, since you're saying that at least in the short term, medium term, Shree will be wobbly if someone wants to play the cement story, is there anything else that they can look at?
Definitely, ACC will be the next counter wherein as an investor they should look for, because the way the demand and the sales number has been reported in the March 2018, it is just like the demand have been increasing due to the affordable housing and the way the infra spending is increasing. So looking for a long-term perspective, the stock is almost corrected. Now the consolidation phase has been started on the technical background, but fundamental point of view, there are a lot of restructuring also happening within the company. So I personally feel this quarter there will not be an impressive, or rather maintain the expectation of the market, but second quarter onwards the profit margin will also increasing due to the sales numbers are increasing on quarter basis. So ACC will be my next bet in the cement sector.
Okay, so that's the view that's coming in on Shree Cement. Mainly it's a wait and watch approach on Shree Cement. Hari does believe there could be more potential downside, but as an alternate, if you want to play the cement story, Ultratech is the stock that Hari spoke about, Ramco is the stock that Avinash spoke about, and Ritesh likes ACC at this point of time. And finally, the last stock is basically since the markets have corrected significantly, the Nifty is up because it's been driven by certain stocks, but the mid caps on a whole have corrected significantly. We're asking our guests to name out one stock they believe that investors should hold, not for a long term, but for at least for a medium term, a few months, or probably by the end of the year, that they believe that could generate good returns for the investors. So Ritesh, I'll start with you. You like Edelweiss. What's the rationale for liking Edelweiss?
See, basically on the technical and the fundamental ground relative rotation graph, I personally feel now the banking stock has been bottom out and the NBFC is also going to be supported now. So I personally feel in the NBFC space, Edelweiss will be one of the best counter, and overall company profile point of view, they are managing 1.63 trillions of wealth under the management. So, and recently they are coming up with the 2,000 crores of collection of the funds from their HNI customers for the distressed investment. They are coming out with the 2,000 crores of investment into the lending and the expansion plan as well. At the same time, they have collected 1 billion collection from their institutional clients also for an expansion and the infra fund. So I personally feel the way the company is managing the asset under the management and the way the company is growing it, I tracking this counter from almost 60 to 70 rupees and right now is running it around 300 and 350. But the way the company has reported the profit margin and the growth on quarter basis, for a short term or medium term perspective, Edelweiss will be the best bet. I could say 380 targets can easily be achievable in next 3 months of time.
Okay, 380. So another 30 rupee upside, 380. So that means another 80 rupee upside is something that you see. Ritesh, just wanted to ask you, despite the rally that we've seen, the counter, as you said, has moved from 70 to almost 300.
Right.
Still, do you believe traction will happen? And what's the key risk if someone is taking a bet? What's the key risk that he should be aware of while taking a bet on Edelweiss?
See, if you're looking at the counter is running at around from 60 to 70 and moving at around 300 right now. If you look at the balance sheet from last 2 to 3 years, constantly there is a constant improvement in terms of increasing the wealth of the organization. At the same time, the profit margin is also growing on year basis. So company is performing year basis with the good numbers in terms of sales, in terms of profitability. So there is no risk factor if you're having a long-term horizon. So right now at the range of 300 and 310, the stock is consolidated between 270 to 350 and 330. So it is a consolidation phase of the stock. But long-term perspective, if you ask me, the target is more than 500 plus. The way the company has projected their fund deployment and the profit margin is going to increase. But a short-term perspective, say around 3 to 6 months of time, 380 will be my bet for the Edelweiss.
Okay, 380 and then 500 is the bet that Ritesh has spoken about on Edelweiss. And what makes insecticides attractive, Avinash?
No, again, Darshan, this is a kind of a dark horse kind of investment opportunity, because within the agri space we have seen a lot of companies reporting good numbers but have not delivered on the stock performance. In fact, this stock has actually come off from its high of around 900 odd rupees. But if you see the structure of the business, is a large generic agri player, has a top line close to about 1100 crores, a EBITDA of 160 crores, and last year was typically a good year. I think profit after tax improved by almost 40 odd %. And what is interesting about this company is now they are moving slowly from the generic space to the product molecule space. In fact, their product development has got extremely aggressive. Current year they are talking of putting out 10 more products in the market, and they've tied up with a Japanese company called Oak basically to do primary R&D. And obviously product molecule development is a long process, but they have tied up with one of the best companies in Japan. Most importantly, in terms of the margin improvement, what they commented on the con call last time has actually got delivered. They have actually improved EBITDA margins by almost 150 basis points. So our sense is that the company's main focus is profitability. Hopefully the monsoons are good and we see a good traction on the generics to the product kind of business, which is largely a branded business. Almost 75% comes from the branded sale business. Our sense is that valuations don't look very expensive. Our sense is that from a EPS of 40 rupees in the current year, we could easily see a EPS of around 52 to 53 rupees in the running year, that is FY19, and hopefully interest costs as well as the return on equity, return on capital employed are pretty attractive for me to say that we could see at least 18 to 20% kind of upside even from the current order.
Okay, 18 to 20% upside is something that they are seeing, which means again coming back to levels of over 1,000 on insecticides India. And what about you, Hari? You like HPCL? What's the rationale?
Yes, I think especially after the correction that a lot of these downstream stocks have seen, I believe that there are 2 or 3 things that are going positive for HPCL. Number one, I think one thing is very clear, that the Modi government doesn't intend to put any subsidy burden on the downstream companies. So I think that was a big worry, that they may put a burden on downstream companies. I think now that seems to roll out. Number 2, I think oil, at least for now, appears to have made a kind of a top at $80 a barrel as far as the Brent market is concerned. And I'm saying that largely because, especially what happens on the Friday Vienna meet is going to be critical. And most likely, I think from the 1.8 million barrels of cut they've done on a daily basis, it's going to come down to about 0.2 or 0.3. So I think that is going to be a big supply coming back. We could actually see oil getting back below $70 a barrel. And that will be, I think, a big positive for HPCL. So we like HPCL. I think at 300 it looks to be grossly underpriced. Nice dividend yield. We actually look at the stock with a target of 350 in 1 month and about 400 in a couple of months.
Okay, 350 is the target. Just one quick thing. Is it only HPCL or do you like the oil marketing space? Do you like the other companies also?
BPCL, yes, but IOC were a little cautious because it has a very large refining property, and refining, unless you have large inventories where you can show higher costs, we are not too positive on that. So I think downstream HP will be a first choice, followed by BPCL.
Okay, so that's the view that's coming in on the picks that our guests have spoken about. So insecticides India is something that Avinash likes. Edelweiss is something that's recommended by Ritesh, and HPCL is something that Hari has spoken about. But with that, it's a wrap on today's Hot Money. Hari, Avinash and Ritesh, thank you so much for joining me on the show. Ask BQ comes up next. Stay tuned to Bloomberg Quint.